All right, we've got some people joined in here, so we'll kick it off. More people will be joining us as we go through this, but welcome to one of our local administrative advisor webinars that we are doing. We're working on doing these twice a month to ensure that you get the training that you need. Today, we have with us Kerri Nakamura, who is a local government budget finance guru, many years of experience. Super excited to have her join our LAA team and help provide guidance and training and answering questions to our LAA communities. Today, we have part one of creating transparent budgets that reflect policy goals. And as we go throughout, feel free to put your questions in the comment box, or you can put them in the Q&A box. And we'll work to try and get to those as we're going throughout the presentation. So with that, I'll kick it over to Kerri and let her take it from here.
Wonderful. Thank you, Liam. And all of you out there whom I cannot see, by the way, welcome. And we're glad you're here today. We're glad you were able to join. This is sort of a new training medium for me. So I hope that you'll be a little bit patient if we have some hiccups as we go along today. But we'll get better and better at this as we learn how to present in this kind of an environment when I can't see those who are listening. So with that, as Liam said, today we're going to work on what we're calling Align and Shine, creating transparent budgets that reflect policy goals. And for those of you who have been to my trainings before, you know that I often don't get through the full training. And so we've broken this into two parts. And we are really hoping to get through part one today, the first hour, and then we'll have part two where we go even deeper into the subject matter. With that being said, I always like to answer the questions that you have in your mind. And so if you have questions while we're going through the training, please put them in the chat and Liam and John will interrupt me. I've invited them to do that. They're not being rude. They will interrupt so that we can get your questions answered as we go, even if it means we don't get all the way through the presentation, because part two will pick up wherever we end part one. Okay, with that, let's get going. Today, I intend to focus on what is a budget, what is budget policy, how does a community establish budget policy, and we're going to really beef this section up in future trainings. But for right now, we'll kind of test the surface of that, and then we'll get into the budgeting basics and resources, and we'll deep dive the Utah municipal budget process. So first off, what is a budget? I would suggest to you that it's more than just a bunch of numbers. It's actually the way that you show your community what you're doing. And it's the revenue and expenses that you have planned in order to meet the goals that you've established. And hopefully you've established those goals, because when you run for office, you run because you want to accomplish things. And really the budget is the way that you put those actions in play. And that you make them happen for your community. I like to spend a lot of time talking about how your values should drive your spending. But even more importantly, I think if I look at your spending, I don't think this, I know this. If I look at your spending, I can tell you your values. And I've updated a chart that I've shown a lot throughout my training, but this is just my own personal spending. And when you look at this chart, there are some things that you can learn about me. And because you can't answer in this webinar, I'll just let you ponder it for a quick moment, the different things you know about me when you look at this chart. I think one of the things you know about me is that I don't like paying banking fees. You can see less than 1% of my spending is on any kind of a banking fee. I loathe banking fees. You also can see that I do some charitable giving. Groceries take up a lot of my budget, but the vast amount of my money goes to travel. And if you know me and you've been around me very much, you know that is what I value. And so it's not surprising every year when I run this chart to see that most of my resources go to travel, because that is what I value. Seeing the world around me, learning about different cultures, different communities, and it comes through in my spending plan.
So Kerri, is that little thing that says tickets and events, is that speeding tickets or
Oh
what
yeah,
is?
right. No, those are tickets tickets and events to go to concerts and do different.
I know. I was just giving you grief.
But it's interesting. You also see I spend very little on vehicles, right? Vehicle and fuel. We drive a vehicle that's paid for. I don't like to make car payments. And we're down to one vehicle because I don't like to spend a lot on fuel. So it is interesting how in a spending plan you can see that. And John, I would suggest the same is true for government. That if I take a look at a government's budget, and I've got two examples here of budgets that I pulled out of 2025 budget plans from different governments across Utah, and you can see the same thing. So look at the chart on the left. And on the left, you can see that if you look at police and fire combined, that's 48% of their spending on there. Not public works, they're coming in at 9%, almost 10% there. Parks and Rec is very important to this community. And I will tell you that this community, if you visit the community, you feel that. You know that this community really values their park spaces. They have some aggressive goals around park spaces. That is not to say that there's a problem with the chart on the right. It's just that you see different values on that chart. Whereas we have, 48% spending on police and fire on the chart on the left. On the chart on the right, there's 63%. There might be some other things going on in that community that lead them to that much of a higher expenditure for public safety. But some things take a hit when you make that choice. They're not able to spend quite as much on parks. They're not able to spend quite as much on streets. And they haven't even broken out spending for community development within theirs. Their general government is about the same, just a percentage difference. But when you have that kind of spending on public safety, you can see that the other things you can't spend as much on. And that's just because there's only so much of the pie to go around. But as local officials, you really have the ability to influence where that spending goes between the different slices of that pie. And budget policy is about setting some goals and saying, this is what we want to start to have our funding reflect. So again, just like in my personal chart, it comes back to your values driving your spending. And then I look at your spending, or John looks at your spending, or Liam, and we can see what you value as a community and what you're trying to achieve from a policy state as a community. There are pitfalls if your goals are not aligned with your spending. You will have spending patterns that you'll be out articulating to the community that you value certain things. But if you haven't aligned your dollars with that, it's very much like the picture you see on the screen right now. Planning matters. Planning matters for your community. Planning also matters for your budget and matters for what you're trying to accomplish in your budget and with the numbers. So how does the governing body go about doing this? I would suggest that the governing body spend some time providing legislative direction for the budget. And that means not just after you get that budget the first Tuesday in May. I would suggest that budgeting is sort of a year-round activity. It is one of the most important things that a legislative body does. It's not just balancing the numbers. And so you've got to have an opportunity to sit down as a legislative governing body and provide the direction that you want to see built into those budgets and built into the numbers as they come forward to you. There are lots of different tools you can use to do that. You can go through strategic planning. I've seen communities use policy statements. I've worked with communities that use legislative intent statements that say, it's the intent of the legislative body that we see A, B, C, and D, and then they hold the administration accountable to delivering on some of those intents through the budget numbers. And then you might use goal statements. So there's no one way that you have to do this, but if you aren't providing as a legislative body some broad overview of what you're trying to achieve and have some alignment as a community there, you're missing the real opportunity to control the numbers rather than have the numbers control you. When you give that policy direction, it should be intentional. It should meet the community needs. And it should be measurable. And we'll go through a few examples in a minute of what some policy statements might be that could be measurable as you go along. And then achievable. I mean, you certainly want to shoot for the moon, but you also want to be able to achieve what you're setting out to achieve. So there's no right or wrong answer when you're talking about budget policy. But there is some guidance. There might be best practice guidance, but there's not a right answer or a wrong answer. And a lot of it depends on what's going on in your community on the ground. Just like that example that we looked at. I mean, I haven't dug into the numbers to know, or to the community to know, why does one community have 63% of their general fund budget going to public safety? Like, do they really need that? Or the other community, I would say, has some pretty clear policy direction around parks and recreation and how they believe that impacts public safety. That if you have those spaces and you have those opportunities, actually your public safety costs go down because you're providing other things, maybe for kids to do in the community where you might need law enforcement to help control some things. Maybe you don't need it if you've got some other things available through Parks and Recreation. John, in another training, will really get into this of how staff can help the body, the legislative body, coalesce around a policy direction. And I mean, John could spend hours on that. It's much easier said than done, but it is something that needs to happen if you're really going to have a budget that's driven by policy. But there's a hard truth in this, and that is that staff should not substitute its policy goals for the policy goals of the elected officials. And especially in smaller communities, I think when you have individuals who've just been around a long time, it gets very comfortable and very easy to just come in and keep doing what we've been doing and not really understand that you really do have an opportunity, but it's hard work to shift the focus in the community and to shift the conversation along. So I've said it before, policy should drive the numbers shouldn't drive the policy. So this is just a really quick graphic that you could use to say you establish your budget policy, you allocate your financial resources, you monitor and control the budget, and we'll talk a lot about monitoring and controlling the budget in part 2, not today. And then you ensure compliance and accountability. And you ensure compliance not just to make sure the spending's okay, but to make sure that the policy goal you're after is actually being achieved and that you're actually moving in the direction that you set out to move in as a community. Here are some sample policy objectives that you might, that these are real from other communities. So these are things that other communities have said. The legislative body has sat down and said, this is what we want to achieve. And one is, I want to introduce this concept to you of a structural balance in the budget. And this is that you have to have enough ongoing revenue to pay for your ongoing expenses. And we can have a whole conversation around that. But there's this idea that you shouldn't balance your ongoing budget with one-time money. And so I have some communities that have actually set up policy objectives and policy goals around making sure that their budget is structurally balanced. And that can be tough sometimes, especially if you don't want to increase any of those ongoing revenue sources. The one being under your biggest control being property tax. If you do not ever want to increase property tax, which I'm going to put a pin in this and say, I'll challenge that policy if that's your policy. But if you never want to increase your ongoing revenue source, you're going to have a structurally imbalanced budget, and you're going to have to figure out a way to deal with that. And plugging the hole with one-time money is not the way. Another sample policy objective may be that you want to increase the acreage of green space as a function or a factor of 1,000 population or 500 population, or whatever it is. You measure what your baseline is and say, this is the acreage we have now per whatever set of population, and we want to grow that. We want to have more green space in our community. We want to have more park space in our community. So that's measurable. It's achievable. And it's the kind of a policy guide that then the numbers can start to coalesce around that. And you can start to say, well, we need to put some money into that if we want to move that ratio that we have in our community. Another sample policy objective from another community, lots of communities, is to look at your streets and decide what level, and this is all done in an engineering state, but what level do you want your streets to be? Some communities say a B. We can't go to A. We can't afford A to have all of our streets be at A, but we can have them be at B. And then what you do is you look at your maintenance budget and you start to make your maintenance decisions around bringing streets that are maybe at a C or a D up to a B. I have some communities that are really keen on not losing their law enforcement officers. There are some good reasons for that. You don't want to train up officers and lose them to other communities. And so some will set goals around what they want the compensation to be for police officers, that they want to always be compensating within the top 10% in the region, so that officers are less likely to leave their organization and go to another organization for just a little bit more money. You might have a fund balance policy objective, that you don't want your fund balance to drop below 75%, or you don't want it to drop, cities and towns have different fund balance levels. And you could say, I don't want it to drop below 60%, whatever that is, whatever you're comfortable with within the law, you can set a policy goal around that, and then you can measure that goal. And over time, you can see, are we meeting that? Are we being fiscally responsible in meeting that goal? And then I talked a little bit earlier about some property tax policy direction. And if you haven't had this conversation as a community, I would suggest that it's one that you tee up. Do you want to have large, less frequent property tax increases, or do you want to have smaller, more frequent property tax increases? There are very few examples when you can say no property tax increase ever. I was talking with a city manager a couple of weeks ago, and they talked to me that they are in a very high population growth community. And so their sales tax is rising faster than it might be for a lot of other communities. And so they haven't had to look to property taxes for quite some time, because they're getting natural growth in sales tax, because as you know, sales tax is divided out among the communities, 50% population, 50% point of sale. Because of their population growth, they haven't had to turn to property taxes as much. But this city manager knows they won't always be in that position. There will come a time when they will have to wrestle with this property tax policy direction. And I would try to understand from your legislative body, where do you fall on that? Do you want large, less frequent, or smaller, more frequent? And that's going to drive your structural budget imbalance discussion. When you start to look at that, you can start to measure over time how structurally balanced you stay as a community. And this might be a good time to talk about, when you're doing these kinds of policy objectives, it's great to look at like a 5-year planning horizon, so that you can set your goals more than 1 year at a time as you're working to get those big policy goals. So that's a lot for the first 20 minutes of our conversation. But I want to talk about how then all of that falls into the budget message that you will create each year with your budget. If you've done that pre-planning, your budget message becomes very easy. And if you are not right now producing a budget message, I would encourage you to do so. I have a lot of different examples of budget messages, and even a thing that is called a residence or a citizen's budget, where different communities take this, the budget can feel pretty complicated. You think it feels complicated to you as a local official, try being the public that doesn't deal with it as often as you do. And so put some of it in the narrative. Don't leave everything just in, the numbers and the rows of numbers. Use some charts, use some narrative. And in a budget message, talk about what you're trying to achieve with the budget. Talk about some of these policy goals that you've set as a community and how you're putting your numbers into the budget to try to achieve them. Talk about some of the assumptions that you're using. When I just gave you the example of the community that has high population growth, and so they don't need to turn maybe to property tax increases right now, share that knowledge with the community. We're making assumptions in our community that we don't need to raise property taxes this year because our sales tax growth is robust because we have this population growth that's spurring ongoing sales tax revenue into our community. Talk about some of those assumptions that are in there. All of you are going to start earning less interest. If interest has been, a major part of your budget strategy on your, fund balances or your retained earnings in your enterprise funds, they're not going to be as robust moving forward. I don't know if you've looked at your CDs and the things that you might be investing in personally right now, but the interest rate is down a full percentage point on those right now, and it's only going to go lower as inflation comes down. And so talk about some of those assumptions, like use the macro to help the public understand why you're seeing the changes in your budget that you're seeing. Identify opportunities. Your budget may include some unique opportunities that you had as a governing body or as a municipality that aren't there every year. Maybe you sold a piece of property, and with that piece of property sale, you're using it to do something really unique and satisfying on a one-time basis. Share that with the community so that they know that that's what you're being a good steward of the tax dollars. And then focus on the major changes from the prior year as you discuss the changes within the budget. I mean, for example, if you decide to back off public safety spending a little bit and put more into parks, describe that. Describe why you did it. Describe that you did it because you think there's going to actually be, a relationship between those two spending categories. And I'm not suggesting, you go cut public safety and do parks, but some of you may be led to those kind of decisions. Maybe you want to put less into streets and more into parks. Maybe you need to put more into public safety. But talk to the community in a budget message about why you're doing those things. When you do that, their input into your budget process becomes, pardon me, a lot more meaningful. So that's a lot on budget policy. But before we can jump too much further into budget policy, I need to go over some of the basics of budgeting. And that's what we wanted to do in this part one, is we wanted to spend some time really going through some of the basics after sort of painting that, very high level picture of some of the work that you can do. And I would suggest those budget sessions that I've just talked about, those policy setting sessions, I think those can start happening in the fall. You're on a July 1 to a June 30th budget. And so once you kind of get through the summer and you've kicked off your fiscal year and you're into the fall, start having those high level conversations about what you want to see in the following year's budget. So while you're managing this year's budget, start thinking about next year's budget. And then I really encourage you to start thinking about the 5-year budget plan so that when you're having those fall discussions, you can talk about the progress you're making toward your 5-year plan and your 5-year goals. And I would have those in the fall going into the winter so that by the time you're in, early spring, there's some clear direction for how that May budget gets built and how those numbers start to fall into place. And then you go through your budget process, and we're going to talk about this in detail. And then it kind of starts all over. And that's why I view budgeting as kind of a year-round thing. It's not something that we just do in the spring, adopt a budget, put on the shelf, and then we don't deal with it again. So with that, let's get into the budgeting basics, the definitions, the deadlines, and the requirements. I want to start by showing you some resources that are available to you. And this link that you see down on the bottom, I'm not going to push on it, but it is a live link when we share the slides out with you. This takes you to this resource page for the Utah State Auditor. And the auditor has put together such great information. And whenever I update my training, I go back and look at everything they've put together and make sure that I'm sharing with you what they've put together as well. But there are forms and guides and checklists and templates and things that you can use to help take some of the mystery out of all of the requirements and the deadlines for you. So I encourage you to go there. And particularly, I encourage you to look at a document they've produced called the Uniform Accounting Manual for all local governments. And I really like the way this document's laid out because it shows you, those of you who also serve on district boards or might want to understand county government and their calendar year budgeting a little bit differently, it shows you the different things for cities, for districts, and for counties. So that you, and then you can link straight to the law. Because I know a lot of times people will say, well, is it legal or is it just best practice? And I really like that this document's gone in and linked to the law so that you can then go in and read the law for yourself and see why they're including in the accounting manual, and then why I include in my training the different things that we include. So those are just a couple of really good resources for you as you dig into the budget and dig into the budget process. So in Utah, budget balancing or balanced budgets are required. You do not have the luxury of deficit spending. Every budget must be balanced for every year. All funds within a fund, and we're going to talk about funds in a minute, lapse to either the general fund balance or the balance of the respective fund or the retained earnings of the respective fund at the end of the year. And so it's kind of this snapshot in time on June 30th on the last date of your fiscal year. But just remember, it's not just your general fund that needs to be balanced. Every single one of your funds need to be balanced. And then I talked to you a little bit earlier about how the total that you can hold in fund balance differs by whether you're a city or a town. And I've just put the differences here for you. So towns, and I think most of you are towns, you can have 100% of prior year revenue in fund balance. Cities are allowed to have 35%. And the reasons for that are pretty simple. Number one, the budgets of towns are smaller. And so the amount of money that they may need to deal with, you know, they have very big issues as well that they need to deal with sometimes. And they need to be able to have a higher percentage of their prior year revenue on hand to address those issues than maybe a city would. For example, you know, when Moab had all of the flooding going on this past year in Moab, you know, it was no cheaper for them to deal with that than it would have been for Salt Lake City to deal with it. You know, and interestingly enough, they're both cities, and so they're both held to that 35% number. But if we had a smaller community that was dealing with the flooding, the cost would be just as high, and they would need an ability to hold a higher proportion of their revenue so they can deal with kind of those rainy day problems. That's, isn't it funny? It was flooding and it's called the rainy day fund. That's what we call those fund balances. So you can carry 100% as a town, 35% if you're a city. Districts, for those of you who are on district boards, you can have 100%. So I just talked about funds and different funds and how they have to be balanced. And so this is a list of the different funds. We're going to talk through them right now in more detail. But I wanted to share this graphic on the side because I said to you early on that start showing some of your information graphically rather than just in big chart, you know, numbers, rows of number charts. And this is what one community put together to try to help in their budget book, to try to help the public understand how their budget lays out. And so, you know, this is a big community, I'll tell you. And 24% of their total budget. So when they look at all of the funds added together, 24% of their total budget is general fund. That is probably not reality for most of you. Most of you, that would be a lot higher proportion. For this community, they have an airport, and airports are really expensive. And so the airport takes up a bunch of, if you look at the total pie, the airport takes up a big slice, and that's why their general fund is 24% here. So don't get caught up on that. But I just thought it was an interesting way to show the public of this big, you know, instead of just a pie, it caught my eye to look at it a little differently. And so I've peppered the presentation with some of those different charts as I've come across them, just because I think they're interesting and they're things that you might want to think about as you work on educating the public and creating more transparency. That's the shine when we say align in this training, when we say align your policy, shine, let's be transparent. Let's help the public understand what's going on. So funds, I think, are fundamental to the understanding, and you need to understand how funds work, and that each fund is a self-balancing set of numbers. And you have two different kinds of funds. You have governmental funds and you have proprietary funds. And I'm going to talk you through these different kinds of funds. And I know many of you have these different funds in your communities, even if you're a small community. Most of you are running more than just a general fund. And please do not confuse different funds with different checking accounts. Not the same thing. You might use, one checking account, but it handles multiple funds. You might have separate checking accounts, but you can't get confused thinking that a different checking account is necessarily a different fund. I just put that out there because I get that question a lot about the checking accounts. So the general fund, that's the one most of you spend most of your time talking about with your constituents. I put the different sources of revenue for the general fund there on the side that you can see. The biggies, of course, are property tax, sales tax, utility sales tax, fees, fines, charges for services. You might have road fund revenue in there, and interest. I should have made interest shrinking because I've already told you that's going to start going down over time. This is the definition out of the code of what the general fund is. You can read it, but I'll just describe to you generally that it's where you provide most of your basic services for your government, your police, your fire, your parks. Now, I'll put a caveat, that's unless you're in a district for police and fire. Some of you may be in a special district where different communities come together to do that. But if you're a traditional municipality, you're running your police and fire out of there, you're probably running parks, planning and zoning runs out of there. Just kind of the general services, streets. You might get different streets revenue, but you still usually run streets programs and street maintenance, public works out of your general fund. The reason that we limit how much you can have in there is because we don't want to take in more money than what you need to spend in a year, or without a little bit of cushion for the emergency, because you're not in the business of hoarding money and making interest on the money. So that's generally basically your general fund. Capital Projects Fund, for those who have been through my trainings before, know that I love the Capital Projects Fund. This is a fund where you can save over time. This is a fund where the funds don't all fall to the fund balance at the year end. They stay in the project. So if you have, Elm Street reconstruction and you've budgeted $500,000 for that project, that stays in the project year over year over year until you finish the project or move the money. I've listed some different things here that you might do as projects within a capital project fund. I've got them listed there on the side. But I really like this fund because it really does let you save over time without having to reappropriate. So if you were to try to do, let's take a swimming pool. Say that you wanted to save up for 4 years, and in 4 years you want to build a swimming pool. And if you did that in the general fund, every year the money that you put in the general fund for the swimming pool, because you didn't spend it in years 1 through 3, would go to the fund balance. And the next year when you do your budget, you'd have to reappropriate it. So then you'd have to say to the public again, we're saving this money, so we're pulling it back and we're reappropriating it for the swimming pool. There might be a temptation some year to not appropriate for it, even though it's one of your larger goals. The Capital Projects Fund makes it easier because you can set up the project of a swimming pool. You can put your money in it in year 1. It stays there. And in year 2, you can add to it. It stays there. And in year 3, you can add to it. It stays there. And then when you add year 4 and you have enough money to do the project, you can then fund the project out of the Capital Projects Fund. So that's why I love that fund. It really leans very hard into that planning that I talked about at the beginning of our budget session, and letting you plan for things over time and save up for things over time. They do have to be capital project related in order to do that in the fund. You wouldn't save in that fund for something that isn't a capital project. Next is the debt service fund. Some of you may have a debt service fund. Your main sources of expense out of this fund would be bond payments or loan payments. Your revenue could be, whatever revenue you're planning on using to pay that. It might be a transfer from your general fund. If you've done I don't know, you might transfer from other funds. But that's how a debt service fund is used. And it's so that there's open transparency. Again, that sunshine, shining light on, this is how much we're paying for debt. And so the community is well aware of, hey, we have these debt payments over time, and we can see how much of our ongoing revenue has to pay off debt before we get to do other things within the community. So the proprietary funds, there are a couple of different ways that proprietary funds are used in local government. One really good example is an internal service fund, and that is used sometimes by larger communities, but a smaller community could use it as well. And that is where the government buys services from itself. So a really good example of an internal service fund is like a fleet fund for vehicles. So if you wanted to have all of the fleet costs instead of scattered throughout the different appropriations in your budget, you could put your fleet costs into an internal service fund, and then you charge each of your different programs sort of more on a business basis, their expense related to vehicles. And that kind of a practice sometimes helps program managers be a little smarter about the way that they use those resources. If they have to pay an internal service fund for the number of vehicles they use or the number of miles traveled, they might think about it differently than if they just have the vehicle in their program and at their disposal to use as they want to use it. So it really is the use of an internal service fund that way helps program managers have more of a business focus on the way that they're using the resources within their program. But most of you are familiar with proprietary funds when we talk about the enterprise funds. And those are, funds that we use and we run a lot like a business. People who come from the business sector like these funds because they understand them more. They are more familiar with it. It's not on a profit loss, but it's more on a retained earnings. And that's more familiar to people who have been in business. Many communities run their water as an enterprise fund. They do this because the water user is not necessarily the taxpayer in the general fund. John, do you have a question?
That came up from Katie. It was back on capital project funds. It just says, can you have multiple capital project funds, each fund for a different specific project, like one for a swimming pool and one for the Elm Street Park capital fund?
I would run all of those as specific projects in one capital projects fund, because that's what the capital projects fund lets you do, is you set those up and then the funding stays with the project each year. And then you don't have to balance every one of those funds individually. Does that make sense?
Yeah, so if you set up one capital project fund and then you have 4 or 5 different categories under that, you can move things around a little bit in the capital improvement fund, right? But not necessarily.
You cannot move without legislative action, right? From project to project. No,
yeah,
you can. Yes, you can administratively. You cannot administratively set up a new project. So it takes
so what you would do is have one capital project fund, and then you would list each of your projects under that is the best way to do that.
That is the best way. And the council, legislative body, identifies the projects. But you do need to know within that fund, like in the general fund, we don't allow the administration to move money from appropriation level to appropriation level without having a legislative process. In the capital projects fund, the administration can move money from project to project.
Okay, thank you.
Yep, absolutely. So back onto the proprietary fund. And we were talking about water and the different ratepayers. So your taxpayer and your ratepayer may not be the same. Examples of where those might be different: churches, schools, nonprofits. None of those pay taxes into your general fund and are part of the general fund. And I'm going to put an asterisk there. There is a little piece where they pay, but for the most part, they don't. They don't pay property tax. They don't pay sales tax. But they do pay for water use. And that's really part of the reason some of these enterprise funds were spun off as enterprise funds, is to say we want the users to pay for the service whether or not they are taxpayers. They need to pay for the service. The little asterisk that I put over there about when a church or a school might pay into the general fund is utility sales tax. I don't think they're exempt from that. At least I haven't seen that they are. So that's my little caveat there, but it's a tiny caveat. For the most part, they don't pay into the general fund. Other enterprise funds that communities run: sewer. Some communities run golf as an enterprise fund and let the users of golf pay for golf. John, can you think of any others that people use? Water, sewer, golf, stormwater, trash.
Yeah, in Orem, we actually had a street lighting fund. We created a fund for our street lights.
Yeah. So those are some examples there. We just talked through the enterprise, and then a recreation district. I had that on the slide as maybe one of the things. I know some communities wasn't Conwood Heights. You didn't run it, but you were in a recreation district up there, right?
Correct.
That ran, and a district runs like an enterprise fund. It operates very much. If you're on district boards as local officials, it very much operates as an enterprise fund. Power, that's the other one I was trying to think of. Some municipalities run their own power, and they run it as an enterprise fund. So again, just a reminder, each fund must be balanced. So, each one of those different funds that you have is a self-balancing set of number, and each year, each one must be balanced. So now we're going to transition into kind of the budget process and prepping the budget. So some things that I hope you all know by now, but it's just a good refresher. Your fiscal year in local government is July 1 to June 30. Counties and districts are on calendar year, so they're not the same as you. And if you intersect with them and need to share services, that gets a little tricky because your budget years are different. You must hold public hearings to adopt and amend budgets. Monthly budget reports for management. I think that's a must. On smaller budgets, I probably would even do monthly budget reports for legislative, or at least minimally quarterly reports for legislative, just to keep, and we're going to go in part 2, we're going to go really deep into monitoring. We're not doing that today. And then budgets need to be filed with the state auditor 30 days after adoption. And then there's a whole financial reporting package that gets filed together. Financial statements and reports are 180 days after year end. State compliance audit, 180 days. All of these are 180. Single audit report and report on findings and recommendations. If you don't have an accountant on board with your city, which many of you probably do not, we can help you with those dates. I mean, they want you to comply. The state auditor's office does not want you to miss compliance on this. And so there are a lot of resources to help you stay on top of getting those packages reported. And for some really small governments, your package looks a little different than others because your budgets are smaller. So I'm going to pause there really fast and see if any more questions come into the chat. No?
Nope, we look good.
Great. Let's deep dive then the municipal budget process for the last 15 minutes that we have today. This is the process in general. Prepare the tentative budget, make the tentative budget available to the public by the first meeting in May, providing notice of and conducting the hearing on the tentative budget. And it needs to be 7 days notice, and we've got other places where we'll really help you through that so that you don't miss those. Then then the legislative body makes the adjustments and adopts a final budget before June 30th. And then, of course, as I just mentioned, you'll file the budget with the state auditor within 30 days of adoption. The reason I have circled prepare the tentative budget and file the budget in that yellow color is because those are really kind of administrative. Those are not legislative tasks. But once that budget gets handed over to the council by the first meeting in May, the next 3 steps are all legislative steps. It's all the council taking their action. The council schedules the budget on the tentative budget. The council holds the hearing. The council conducts the hearing. And then the council makes any final adjustments they want to make and adopts the budget. And if you're looking at this and you're feeling like, wow, that's a pretty compressed timeline from May, the first Tuesday or the first meeting of May until June 30th, you're right. And that's exactly why I say budgeting isn't something you just do during the budget cycle. You do it all year long, because this is really when you're honing in those numbers. You really do not have time. And I'm working with an entity right now, and I have to tell you, it's frustrating to me. It's a calendar year entity. They have to adopt their budget in December. They know that. They've done it every year. And now their legislative body is saying, oh, we want to have all of these policy conversations. And it's like, you don't have time. From when that budget gets presented to you until June, you do not have time to have those deep dive policy discussions that shape the direction of the budget. Those need to happen before. They need to happen much, much earlier than when we're crunching the numbers to make sure that we can align the numbers with the direction that you want to go. So just know that. I mean, I know that this is a compressed time, but that is the legislative role from May until you adopt the budget in June. So preparing the tentative budget, again, as I noted, this is an administrative responsibility. There needs to be a review to make sure services align with the organizational goals, those goals that were already set. Review service delivery options. Don't always just assume that because we've been providing this service in-house, that's how we have to do it. Conversely, don't always assume that because we've always been contracting this service out, we always need to do it. Make sure you at least test that every once in a while and say, is the service delivery option still the best option? Then the budget officer costs next year's services. Either whatever changes were proposed during the goal setting process, or, if you're going to continue on services, you have to affix a cost to those services. And again, they're going to be higher than last year. None of our costs go down year over year. And even government, I mean, they're no different. Government is not immune to inflation. And so the costs likely will be higher next year, which is what leads me to reviewing your fees. So most of you charge fees to recover the cost of service. If you don't review your fees, inflation will eventually eat away your cost recovery on your fees. And so you need to make sure that I don't know how periodically you want to do it, but I would say at least every 3 years, you need to do kind of a deep dive of some of the fees and maybe put them on a rotating schedule so you're not doing them all in 1 year, but that you go in and you look at the cost of the service again and you cost the fees and you make sure your fees are recovering your cost of service. You might choose not to have fees 100% cover the cost of service. There are some really good examples in business licensing and other places where you might choose not to fully recover. But make certain that if you're not fully recovering, it's because you chose not to, not because inflation ate away from it and you never took a look at it. So from there, then you'll prepare your revenue and expense estimates. You'll use a lot of your historical information, but you'll also use current information. For example, you'll probably look at how many active building permits you have out, how many you expect to come out this year when you're preparing those revenue and budget expenditure estimates. And then the budget officer will prioritize from the administrative point of view what it is that aligns and that we want to try to achieve for the coming year. And then the budget will be organized and ready to present. to present to the legislative body for deliberation. Remember, the tentative budget is due by the first meeting in May. And for many of you, that's the first Tuesday in May. For some of you, it's not. It's maybe the second or the third if you only have one meeting a month. But it's your first meeting in May when that budget needs to be presented. Don't feel like you can't give, sneak peeks early, because you can. I mean, you can start having some of the conversations ahead of time before that budget is actually released, if you choose to, as a community. And then I want you to really think about transparency as you're both preparing a tentative budget and as you're going through the budget process as a legislative body. And remember that taxpayers trust you with the money that they give to you to provide services and to create the kind of community that you all want to live in. So do all of your budget deliberations in public meetings. Don't have, sidebar closed meetings with, going and making the deal and it's not happening in a public meeting. It's not being deliberated. That doesn't mean two council members can't have a conversation. But if those two council members then go out and get everything lined up so that all we do is come into a meeting and have a motion and have no discussion, that doesn't lead to transparency. Demystify the numbers. We've talked a lot about that. Put some narrative, put some charts, explain, make it so that the community can really understand what that is. Put your numbers and narrative on your website. If you have a community website, share as much information about the budget as you're going through the process as you can. If you've developed a strategic plan that helps guide the budget, how's that there so people can go look for it? Include monthly or quarterly updates on your council agenda. And I'm going to tell you, I went around and I looked at a lot of smaller communities to see if I could find on agendas on the public meeting website examples to share with you. And I couldn't find a lot of them. And so I really hope that we're doing that and that we're sharing that information in a very public way. I'm going to dig a little deeper, but I couldn't, going through the open meetings website, I could not find, just on hitting some names of different communities, I couldn't really easily find information about any kind of budget reporting going on mid-year. Have honest discussions and cut the rhetoric. And that really, to me, gets around the rhetoric around property tax. It's the most despised tax for a reason. It's the only tax that you really get a bill once a year that you have to pay. People don't understand it. We'll have a session later where we really deep dive property tax, but you understand government. You work in government now. You're part of government, and help cut some of the rhetoric around that, because if you never want to raise property taxes, honestly, you have to start looking at some point in time of what services you want to cut. And then focus on outcomes. And I'm going to talk a little bit more about that later. I wanted to share this example with you that I found from a community, because I thought that it was a really nice way to use a little bit of color and lay out their budget. It's numbers, it's not into charts like I had suggested, but I like the way that to me, it's pretty easy to read. And it's got their revenue and their expenditures at the appropriation level through the general fund. And then I really liked that they kind of had this one time down below, which were different one-time sources of revenue or expenditures that they had, so that it was really showing for the public what they were expecting in one time. This is another look at another community's projected revenue by source. So this is taking a chart like the one you saw there and then starting to put it into chart format so that the public can more easily understand. And it really, much more so than a chart, where here in a chart you can see that sales tax, is big, and property tax is medium, big, and franchise tax is, up there as well. This just lets it pop at you that, how much of that budget really is sales tax, property tax, franchise tax. And the sales tax, you have, a little bit of control, but not tons of control. Property tax, you have a lot of control because you set the rate. It's not your auditor. I was in a training and someone said, oh no, we just get whatever the county auditor tells us. Not true. You adopt the rate, you get to decide how much revenue you want to get. And it's a rate driven, or it's a revenue driven process. So you don't have to just take what the auditor gives you. Those are your choices. And then franchise tax, you don't have a lot of control over that either. That's the utility sales tax. This is another community. I kind of like the way they did this. This is on their expenditures within their budget. So they're showing their 2024 expenditures and their 2025 expenditures so that you can, and this is that same community that I showed you before that had 63% dedicated to public safety in 2025. And I think that, you know, it's like there is a policy decision that was made when you're going from 58% to 63%. And I understand that one is their estimated actual versus budget. But if we only spent 58% on public safety, do we need to budget at the 63% level? That might be a question that you want to ask. But I thought that was a nice way for that community to show that. This is just a couple of other examples of charts that communities have used to show their expenses. This is the same community showing their expenses in two different ways. So we'll share these with you. We're down to 3 minutes, but we're getting close to the end of the process here. The legislative responsibility, we've talked a lot about making the tentative budget available to the public, providing notice of the public hearing, and there are your requirements there that the tentative budget needs to be available for at least 10 days. And then the public hearing is set with at least 7 days calendar notice. So those are two different things. Making the tentative budget available, you can make it available online, in a library, lots of different ways. But then that public hearing really needs 7 days notice. John, question?
Yeah, you have their tentative budget available to the public for at least 10 days prior to adoption. What that means is not adoption of the tentative budget, it is adoption of your final budget.
Correct.
Because oftentimes in the first time in May, the council will make a motion to adopt the tentative budget.
Correct.
And that just means they're adopting that for discussion until they pass their final budget. But so the tentative budget doesn't have to be available for 10 days prior to adoption.
Correct.
My experience is it's only available to me about 20 minutes before I get to council meeting because we're working on it right up until the end. So
that's a really good clarification. And I'm going to think of how we can word that to make that more clear, because you're exactly right. They'll adopt the tentative budget that starts this process of public hearing and amending the budget and things like that.
Right.
Before they adopt the final. Yep. Good clarification. Okay. And then the legislative responsibility is to make adjustments and adopt a final budget. You might need to have more meetings in May than you're used to get that done. You might use a straw poll strategy where you have people straw poll things. You need to adopt your budget before June 30th. I'm not going to go through those points right now because we've gone through a lot of them when we talked earlier. But can you shift your focus to what you're buying versus what you're spending? So in most of the budgets I see, very little discussion happens about the base budget. All of the discussions about the little bit that might be new.